because Melnick is not going to be on today, I would like to pass on some of my knowledge and some of my education over the past decade and a half in the marketplace. As you guys know, we look to continue to try to mentor and guide people throughout your trading careers. As you guys know, just a little background about me. Traded since 1998, so it's going on 15 years. And during that time, I've not only trained thousands of traders, but trade myself, and I do my best to be able to feel the marketplace and feel what's going on out there in the marketplace as far as any new breaking news, new breaking opportunities, technical breakdowns, breakups, and just an overall get the environmental picture. You know, you guys who have been trading either with me or have known of me over the past decade and a half, you guys know that I do my best to strive to create the environment that is most conducive to us trading and to be as on top of the ball as possible. So just I wanted to talk about a couple ideas today. The first thing I want to talk about is something that I call the blip trade. And the blip trade is that trade where something blips through a certain level just to be able to end up coming back. What it does is it runs the stops, and we talk about this a lot because you know, there are a lot of breakout traders out there. You know, and I get this question, I get this comment a lot. There are breakout traders out there, right? And these breakout traders are the ones that wait for a stock to break out and break out and break out, and then they finally get to the top part of the range and they go long or they buy it. You may even say that an MCP, you know, today I believe somebody brought it up earlier, and I'm just zipping through some charts, but you know, maybe today people talking about going long the stock today for a little more of a breakthrough or follow through, and this is just a quick chart of today that I put up there, but if you look at past couple days, look at where the stock's coming from below $7.640. I believe we started talking about it here in Shine's room. Just to have another breakout close above $9 at the end of last week, or at least gapping up to $9.15 this morning, $8.60 last week. So, you know, the question always is, do people buy too high? When's the right time to buy? Where do people get in? Now I have a standing philosophy. My standing philosophy is to never chase something. When I do chase something, it's usually where I end up getting beat up. What I like to do is I like to go with the flow of the stock. I like to have something out of the ordinary sort of break out and continue up in that direction and not go against the grain. There are a lot of people who go against the grain, and those people get taken out on stretchers. Okay. When we talk about the blip trade, that blip trade is the area on a chart or the area on a name where you get blipped out. So, for example, I don't know, I'm just zipping through some charts here, but for example, if you look at a chart of Groupon, and Groupon's a name we've been following a lot. You know, did people get blipped out after earnings down here below $3 where we started talking about it? Traded down to $2.69, I think was my best purchase. Sold some puts, sold some $3 puts, and I'm going to keep the options lingo for later on this week. But people they broke stops down here. And when they run those stops, this is a little bit more of a macro picture because it's a 90-day chart. And right now, where they break this level down, they blip people out, and they break all the stops, and April talks about it when something breaks below $4 or $5, it continues to break lower, and they run the stops down here just for it to rally back up about 25% back to the $4 range. So they did blip people out in both directions. On certain days, let's do another chart of Deckers. Just a little quick breakdown of Deckers, and this is also over the past 90 days. Here's a blip again below $30. People got stopped out for it to rally back through. Look at this right down here. I don't know if you guys could see it. If you could see it with where my mouse is, yeah. If you could see right down below that level, below 30, you know what they did? They blipped people out again. And they blipped them out to the downside just to rally back through again to the upside. We're getting to an interesting area here where on the chart we're getting into that resistance level. I believe this is a 200-day simple moving average. And for me, when I trade myself, I like to use just as simple ideas as possible. I don't like to make it too complicated. I don't like to make it too complicated, but when I do use some of these charts, it just gives me a little bit of an edge. So when I see this, especially down here, it starts giving me an idea, especially if something blips above or blips below. Okay, let's talk about a couple more blips. What do I mean by blip? Okay, so we talk about, very often we talk about getting to whole numbers, okay, and just as a review, whole numbers, in my opinion, are $100 whole numbers have the most value, then $50 whole numbers have the most value, then $10 whole numbers have the most value, then $5 whole numbers, then $1 whole numbers, then every 10 cents, and below 10 cents you're on your own. So when I say that, I look for certain names on Friday, at the end of last week, I believe it was Wednesday, again back to Groupon. We had there was a blip above $4. Look, and it did it twice. What happens above these levels, guys? And you can answer the question. What happens above these levels? And Eminem, welcome to the broadcast. But guys, what happens to these levels over here? Let's go. Stay on your game. You guys know how I teach. You got to be ready to give an answer. What happens above these levels? Above $4 here on the chart. What happens twice? I see on this. Resistance. Double overhead resistance. It's well put. Failed breakout. It's good, guys. You're doing a good job, and I like some of these sellers again. Yeah, so you run into two things. So you do get that double top that we talk about, or you get a few things. You get that double top. You get selling into that buying momentum, which I always talk about in specific, selling the buy momentum. I also call it the blip. So what happens, it gets up to 398, 399, and those of you who have taken my class before, took my class last month, you guys remember we talked about it going through that level. So how many people shorted it down here in the 90s, or up here in the 90s, 390, 395, 398, just to have it go through that whole number and go up to above $4, get squeezed out, the last purchase up there at 410. And not feeling too great because they covered, they got squeezed on their shorts. That's for me what happens above $4. They get squeezed on their shorts just for the stock to come back into that same range again and to hang out in the 380 to 390 level. Remember we talked about it also, 380. What happens down at 380? People get blipped out again. So they get blipped out at the bottom, they get blipped out at the top, then what happens one more time? They get blipped out at the top one more time. So those people who shorted at $4, or they wanted to sell their stock at $4, they get squeezed up, get squeezed above the $4 whole number, just for the name to continue to now use $4 as the resistance point and continue to break down. So those blips are where people run their stops, run the stops of the shorts. So above $4, somebody says, hey, I have 50,000 shares short of Groupon. I want to cover if it goes above $4. What happens goes above $4 and the stock gets squeezed for 8, 9, 10 cents. It is our job, it is our duty to be there to short, to sell into that, not to be the guy who buys it, right? And many of you guys, and you know you have the ability to actually activate a trade long if you want it above $4 by putting in a stop buy as we call it. So you put in a stop buy above $4 because that's that breakout that everybody thinks that is the best breakout. I hate that trade. I love for either the next pull-in where the stock did get back down again to 380 and then rally back up to 410. But both times these things were on a little bit of volume, pushed it above, squeezed out all the shorts just to bring it back into the range. That is the ideal blip as we talk about it, as we call it out. Okay, so that becomes a blip trade to the upside. It squeezes people out, gets stopped out, and then people start scratching their head. Guys, here's another one, right? We had Vivus over the past couple days, bouncing in both directions, again, blipping people out towards the top, getting really excited, and then the stock coming back down to 11. We're below 11 today. Great anticipation, great call out by the broadcast to see that opportunity down here. I guess, again, two little blips before the stock goes above this moving average and continues to trade here throughout the afternoon. So do you guys understand the blip trade? Our job now is to anticipate that blip trade from happening both on the long side and the short side, to not chase that and understand and say, hey, I'm going to short the exact bottom of RIM just a few minutes ago when RIM broke below 50 cents. What is this, guys? As we just learned, what is this right here at 110, 105 in the afternoon? What is that, guys? That is called the blip trade again. Blips people below $11.50 just to rally back up and squeeze above $11.60. When it gets up here again, it squeezes a couple people out just for it to get into the range. And if you see these blips on both directions, one up here above 12.15 earlier today, and now again down below 11.50, 11.45. Remember, every trade has an opposite to it. Okay, there's an antithesis to every trade, and when somebody or the market is trying to show you like, hey, this is a really good short down here, generally it's a good buy, and when something looks like it's a really good buy up there above $4 in Groupon, as we talked about, generally it's a really good sell. And you know, because it's in the outer bands of what we've been talking about, the outer bands, not chasing the outer band, but being almost against the grain at the outer band, or waiting, and most of you guys don't do this, and we talked about it last week, waiting for that best price or no price. So I always feel like stocks always have a pull-in, they always have a rally, so you want to get short, wait for the rally, you want to get long, wait for the pull-in. Okay, one more topic I want to cover today, and I don't want to stay on too long, and like I said, Mark Melnick chatting on the top left-hand corner of your screen. So if somebody wants to give him a shout-out, you're welcome to on the in the chat. Exactly, Westside, and MCP, a blip out again above that number, above $9. How many people out there did it get excited? It got a lot of people excited, and that's what happens. People start ending up buying that instead of anticipating and waiting at least for a pull-in. So I just put up a couple charts between today and a little bit above. If you look at the 90-day chart, let's actually take a look at a 3-day chart. So I guess this is the blip also today. If you look at a 90-day chart on MCP also, this red wick up here is the top part of that blip. Now stock trading right back down, right in the 850 level. And this is a, take a look at it. It's about a 7% move or 6% move off its high for the day. But there are a lot of people out there that bought that up there, that chased it up there, and I do my best as a trader to anticipate that and anticipate the blip happening and staying out of harm's way as opposed to chasing it. Just as an overall strategy for people out there, whether you're a novice or you're intermediate or you're an experienced trader, don't forget to continue to write a small diary at the end of the day, a small little piece for yourself, whether it be a blog or whether it be in just a diary form or on a piece of paper in a notebook, and you have it. And I want everybody to be able to go out there and to write your best trade, your worst trade, maybe the one that got away. Just be able to see what time of day you traded your best, what time of day you traded the worst. Usually that's lunchtime for most people. And please, write that down. BC, it's funny. And put that down. Write that down for you. I write that down for yourself. Grow from it. Learn from it. It's something that I need you guys to, be able to repair yourselves, right? When I started trading, I wrote down all my list of rules for myself, and I wanted you guys to be able to do that and grow your own set of what works best for you. Why is that? Because I feel like analytics and stats and performance is the only thing that matters, right? I've seen 1,000 traders who said, "Oh, I'm the best trader." Well, are you a good trader or are you making money? And don't get those two confused, because we only look for traders who make money, not for traders who are good traders, because there's no such thing. I want you guys to be a good trader and make money, not a good trader and not make money. So please, at the end of the day, every day, please write down a couple sentences for yourself. You'll see the growth, you'll see the benefit of it, and I'll ask for you guys to continue to follow that back 2 weeks from now, a month from now, 2 months from now, 6 months from now. Stick to what works for you. Some traders are better trading pre-market. Some people are better trading on the open. Some people are better trading in the afternoon. I find very few people who are better traders during lunchtime. That's why we try to give our education at about 11:15. About 1:15, just so people get away from their aggressive trading style at a time where the risk-reward goes out the window. Okay, just on the last note, why does risk-reward go out the window at 11:30, 11:45? That's when we stop talking so much on the broadcast, why we take it a little bit slower. Remember, our business is founded upon risk-reward. And when you're in a scenario where a stock can either move $1 in your favor or 15 cents against you, it's a good trade. During lunchtime, if a stock is going to move 40 cents in your favor and still you could lose 15 cents, is that as good of a risk reward? And chances are it's not. And when you're in those type of trades during lunchtime, you end up stop trying to look for your 15-cent winners, and you end up with some 40-cent losers, and you just end up in the wrong place at the wrong time. So be aware of all those items, especially by keeping track of what names, what stocks, which trades, what type of day, what type of market, maybe seasonality is important. Where do you make most of your money in the spring, in the fall, in the winter, during the summertime, which usually most people don't, but we've had some really good summertime trades last year when you had the whole European Greek financial crisis. There was a ton of opportunity out there. So guys, on that note, I'm going to take some questions for the field. If anybody wants to talk or address any stocks or any breakdowns, technically speaking, I am open for a couple minutes to do so. If not, we get back to the live trading broadcast, but I will take some questions. I'll stay on for a minute or two. Guys, don't all type in questions at the same time. I don't want to overload the chat window. So this is a question, I guess, from Doug, or a little breakdown on Jazz. So if you take a look at Jazz, this is over the past 90 days or so. A huge spike up, as we can see, between $44 and $60, 60 being the top. And now a continued downtrend, which is interesting, because you have this continued downtrend where over the past month and a half or so, every time the stock has rallied, it's become a short on rally. And this is what we talk about. What's this right here? Doug, this on the chart at October 17th or so, that's the blip trade again, right? People started getting squeezed to cover their short just to make another leg down about $4 lower, hanging out in this range. Guys, what's this? This is a blip trade down at 48. Here's a blip trade up at 55. So what's the answer, Doug? The answer is for me is that I'm anticipating these outer band moves. Doug, you could put in trades down here. So if you're bullish, you could put in to potentially put in a bid at $48. I know it sounds crazy, but it probably sounded crazy when the stock was at $54. The next leg down was 48, just to pop back up 5 or 6 points. Remember, the first people to anticipate, the first people to put their orders in are the ones that usually do their best, because they're putting it in early. If you chased it down here, you said, man, I wish I could have bought it at $48. We've seen that a couple times on other names also, like even Facebook. How many people? The 3 times you have down here. Here's 19 with a little bit of a blip lower. Again, 19 over here, and then again 19 just for the stock to be $26 today. So those people who anticipated this move, those people who caught these little blips, are the ones that killed it. Everybody else, you sort of chased it a few times, maybe chased it into the low 20s, back down to 19, and then the next leg is $26. Hope that gave a little bit of a breakdown. For me, until this pattern changes, or until it develops an uptrend, Jazz continues to look for a short. It looks like a short trend or a downtrend. The stock does have options attached to it, and one way to play overnights, especially in these type of names, as I believe Jazz is a pharmaceutical name, then way to play some of these on is through the options market, where you don't expose yourself as much by buying puts and buying calls in either direction, in order to give you that overnight leverage, overnight buying power, without having the outstanding liabilities that are out there. You want to do some JWN? Let's check it out. Again, on this, some of these are great examples of of some of these blip trades, and you have blips on both sides of these outer bands over the past, this is again going back about a month and a half or almost 2 months, from down here $54 back up into the high 50s, back down to $54, back up to the high 50s, $54 to the 58, which is that high. Again, these little wicks out here being those outlying moves which run the stops on people, make these blip trades happen, make you buy it at the top, make you sell it at the bottom, buy it at the top, sell it at the bottom. Just understanding that this is in a channel right now. This is my type of channel, and it's more across the page where the top part and the bottom part sort of continue to repeat themselves. And maybe for our next class we'll talk about a bunch of these patterns and some of the stats and analytics behind them. But when these patterns repeat themselves, I hate to be the guy shorting down here at the bottom, and I hate to be the guy buying the top at around 57 to 58. And I see too many people do that too many times, actually recognizing this and recognizing it early allows you to play the outer bands, both the long side down at the bottom and the short side up at the top. Back onto the options front, another way to be able to protect yourself, limit your risk, and maximize your reward. I did see Macy's actually earlier today also, a big red candle if you guys could see today, I guess getting beat up, but also similar type of name, going from 38 to the low 40s, back to 38 to the low 40s, back to 38 to low 40s. And no, I did not make up these charts. These are the actual charts that we're looking at, and this is a perfect example of, again, outer bands getting blipped out up here, getting blipped out at the bottom, right? How many people had their stops down at $38 to say, if this thing gets below 38, I'm going to get stopped out? What does it do? Go below 38 and then continues to rally $4 from there. We see this over and over. Doug, what stock is that you're talking about? Is that on Jazz? Well, so let's talk about a couple things, Doug, right? Let's talk about, again, first holding the stock against you, 2 points. So obviously, every person has a different time frame, and I recommend that everybody find their own time frame and kill that time frame, and not say, hey, I'm going to be a day trader, hey, I'm going to be a long-term investor. Very important we don't change our philosophy on something. If we have a short-term trade, it's a short-term trade both to the long side and to the short side, to the winning side and to the losing side. I too often see somebody change their winning positions to a long-term losing position because they have a bias and they're like, oh, I love this stock and it's going to come back. It's just not what we do. Doug, I'd rather see you lose out of that $2. I'd rather see you lose 25 cents and have ammo down here to be able to buy it back. I understand it's a swing trade. What is your risk reward on it, as we always talk about? And have you gone to the options market to see if your risk reward makes you feel better in the name versus having exposure on stock for $2 at a time? Got burned on some of the options lately. It's interesting. If you have a long-term swing trade, you have to obviously correlate that to a long-term option position, because you're not going to necessarily buy a short-term option that's expiring this week if you think that a name like Jazz will be bullish over the next 2 or 3 months. But you may want to go out and look in the options market for something, either in January or even going out to March, and it will represent a position. I just want to ask how prepared you are if the stock does go down to $45 or down to 50 again. How prepared are you for that? And are you well prepared if the stock's going to go back up to 60 or 70? Are you leveraged enough to make your winning position count? They're actually going out to January in some of these options. You have the 60 calls are 50 by $1.40. And then you have the 65 calls or 55 cents. I'm just, sort of looking at some of these. And just remember, there's one other way also to get long stock, and that's by selling put puts or put spreads. Selling puts is not for everybody, but you are less exposed by selling puts than you are if you bought stock here if the stock continues to take a tumble. Okay, guys, I'm going to wrap it up. Take another look at it. If you have any, sort of you need any insight into the options market, feel free to type something in, and maybe we could, break that down, help break that down for you. Remember, guys, we are out there to continue to learn and to continue to grow as traders and go over information on a daily basis, if not more often than that. Guys, thank you, and I will see you guys back on the live trading broadcast, and we'll continue our mentorship and our education as we go. Thank you again.